Joining me now with more is Jim Warden, CIO at the Wealth Consulting Group. Jim, it's good to see you this morning, joining us from Sacramento, California. What do you make of the market at these levels?
Good to be with you, Kristen. Yeah, it's clear that the market has done very, very well over the last several months, and September really is normally not that great of a month, but we did well. I mean, we went through a number of years where September was down, and the last couple of years has been positive. So I think the momentum continues here. We are aware of some of the areas, some pockets of fraud. Our process is very much focused on risk management, diversification, but we think that there's still, that things are in place for the market to keep grinding higher.
And how long can that grind higher last, and to the tune of how much?
Yeah, so at the beginning of the year, our price target for the S&P 500 was 7,000. We held on to that. April was kind of scary. We said that there's still a path for it. It's going to be a little bit more difficult of a climb. We climbed out of it, and so I think we have a good room to hit that target. Now, I think next year, as the economy starts slowing a little bit more, it's the pace of the momentum is going to slow, but we think that we're still in a good position. The Fed is most likely going to cut rates this month and also in December. As we know, that's really good for the smaller companies that often borrow. They've got more leverage and it's more floating rate, and so we're seeing the breadth of smaller companies sort of catch up to the larger companies, which is great.
Certainly market breadth does seem to be an additive to this stock market, Jim. It has been about a week now since the government is shut down. We've been without economic data that's been on pause, like that September jobs report, which would have come out on Friday. What does that mean to investors that they're not getting access to that data as the next Fed decision does approach at the end of the month?
Yeah, that's a good point, Kristen. I know we're kind of flying a little bit blind here. I think investors, obviously we all want that data. We all want to see what we're doing. For a period, we're going to have to just look at the fundamentals, corporations, earnings, profits, revenue, margins, all those things. And I look at the technicals in addition to the fundamentals. And so we can't really look too much at the macro right now if there's not that much data, but you will get it. I'm confident we'll get that data. I believe the trend is still that, we're kind of in a weak area with employment, and that will likely, slow some of the economic growth. But the positive side is that productivity is increasing. Obviously, we know with AI and what that is enabling companies and employees to do is helping the bottom line for a lot of these companies.
Yeah, and to that end, Jim, AMD stock, publicly traded company, skyrocketing 35% as OpenAI takes an investment in that company. OpenAI, we know, a private firm, but valued at $500 billion last week based on a secondary share sale. Even as this rally broadens out, do you think the AI play, technology as a whole, has more room to run?
Absolutely, 100%. I think we do have to, as this rally continues to extend, and as AI continues to develop, and we will get a little bit more clear picture of who the winners and losers are, which companies are overpriced or underpriced, and so we don't really know 100% all of that now, and we don't know. And obviously, OpenAI is not a publicly traded company. Neither is Anthropic, and so we're working through this. And so, for us, it's diversification. We own a lot of these names. We still love NVIDIA. We did own AMD at one point. We don't own it right now, but we own some of the quantum names. I know your prior guest was talking quantum, so that area is interesting. The whole energy, play on AI is interesting, and so those are areas that we look at. But we're recent buyers of Intel, and some of these areas that have gotten beat up, where we think there could be trend reversals, where the fundamentals are actually improving, the valuation's improved. We like to blend those with some of the stocks that have done quite well, the NVIDIAs and Palantirs that are out there.
Jim Warden, CIO with the Wealth Consulting Group, joining us from Sacramento, California this morning. Jim, thanks again.
Thank you.